August 1st, 2012, 9:30 in the morning. A team of engineers at Knight Capital Group activated a new piece of trading software. The screens looked normal, data moved, orders executed. Everything appeared to be working exactly as it should. 45 minutes later, the company had lost $440 million, 3 times its entire annual earnings. Gone before the trading floor had cleared its first round of coffee. Nobody stopped it. Not because nobody was watching, because what they were watching looked fine. The data was flowing, the system was running. Nothing on the screen said, "This is a disaster." So intelligent, experienced, well-paid human beings sat and watched while the machine ran. That decision, to trust a system because it looked like it was working, has a name. And in 2026, it is no longer just a Wall Street problem. It is the central financial risk of the next 10 years for ordinary people, for you. Welcome to Mind Over Money from 10-Minute Money Mindset. This week, the Pulse pulled back the curtain on something most people are still catching up to. Agentic AI has taken over the infrastructure of global finance. Systems that don't just analyze trades, they execute them. But here is the question the Pulse couldn't answer. What happens inside your brain when you decide to trust one of those systems with your money? Today we are talking about automation bias, the single most expensive psychological habit of the next decade. And why the people most at risk are not the reckless ones. Let's get into it. In 1999, a psychologist at the University of Illinois named Linda Skitka published research identifying a specific and dangerous pattern in human decision-making. She called it automation bias, the tendency to defer to an automated system, to accept its outputs without applying independent judgments, to trust the machine even when the evidence in front of you says otherwise. Skitka tested it on pilots in flight simulators. She fed incorrect data through the automated systems. Wrong altitude readings, wrong navigation data. The majority of pilots followed the machine anyway. Warning lights were flashing directly in their field of vision. The contradictory information was right there. They saw it. They chose the machine. The finding was not that the pilots were irresponsible. The finding was that this is how human brains respond to automated authority. We evolved in a world where trusting accumulated expertise kept us alive. The machine represents the most concentrated form of expertise we have ever encountered. So we defer, naturally, instinctively, reasonably, and sometimes catastrophically. But here is the thing. Knight Capital is the dramatic version, the $440 million in 45 minutes. The near bankruptcy, the acquisition for pennies on the dollar. Most automation bias does not look like that. Most of it looks completely normal. It looks like logging into your retirement account, seeing the AI-generated rebalancing recommendation, and clicking approve without asking what has changed in your life since you set those parameters. It looks like setting a stop-loss order and not thinking about what happens when algorithmic systems start moving in synchronized patterns across the entire market. This week, the Pulse reported that agentic AI now runs the central nervous system of global finance. BlackRock's Aladdin manages risk on over $20 trillion. Goldman Sachs has said AI models are the new operating systems of finance itself. A single model release earlier this year triggered a 2% drop in the Russell 1000 before any human analyst had finished reading the press release. You are already inside this infrastructure. The moment you use a robo-advisor, a savings automation tool, or an AI-powered retirement calculator, you are a participant in the same ecosystem. Running on the same fundamental assumption that the machine is right until proven otherwise. May 6, 2010, 2:32 in the afternoon. The Dow Jones Industrial Average fell nearly 1,000 points in 14 minutes. Procter & Gamble, a company worth around $60 a share, briefly traded at pennies. Accenture traded at a single cent. When it was over, former SEC Chair Mary Shapiro testified that individual investors had lost more than $200 million through automatically triggered stop-loss orders. Not from panic, not from bad judgment, from protection systems executing their instructions perfectly in conditions those instructions were never designed to handle. These were careful investors. They had done exactly what financial advisors recommend. They had automated their risk management so that emotion could not override discipline, and that automation operating flawlessly cost them $200 million in 14 minutes. The market recovered. Their stop-loss orders had already fired. The losses were locked in. That is the specific failure mode of automation bias, not the dramatic malfunction, the perfect execution of a perfectly reasonable instruction in a moment the instruction was never built for. Ellen Langer is a psychologist at Harvard. In 1975, she published research examining what happens to human decision-making when we feel partially involved in an automated process. She called it the illusion of control. When we have even minor involvement in an outcome, our brains register genuine agency. We feel in control in the active sense, not just present, but responsible, even when our actual influence over the outcome is minimal. Think about what this means for your financial life right now. You log into your investment platform, the AI has generated a recommendation, you review it, you tap approve, your brain registers that tap as a decision, you were present, you participated, you are in control, pauses. What you actually did was confirm a machine's analysis without applying independent judgment. The tap feels like agency. It is not. It is participation in a process that was largely determined before you opened the app. In a world where AI is now executing trades and rebalancing portfolios faster than human cognition can operate, that distinction is not abstract. It is the entire ballgame. Here is the question nobody is asking out loud. Not what did the AI get wrong, what did the AI never know? A robo-advisor can optimize for your stated risk tolerance. It cannot know that your job has felt less stable for the past 3 months. It cannot know that your family situation has shifted. It cannot know that the number you selected on an intake form 2 years ago, the number representing how much portfolio volatility you could handle, is different from what you would actually feel at 11 at night when the market is down 15% and you cannot sleep. The algorithm has your data, it does not have your context. And in personal finance, context is not a secondary concern. Context is the whole story. The engineers at Knight Capital had a kill switch. It existed. It was functional. The problem was not that the switch was missing. The problem was that no one was specifically watching for the signal that would tell them to use it, because the machine did not know it had gone wrong. It never does. No algorithm can self-report a failure that lives in the assumptions it was built on. 17 years of work, a $1.5 billion firm, the largest retail market maker in the United States, gone in 45 minutes. Not because the machines were malicious, because the humans stopped asking one question, is this still making sense? Not is the system working? Those are different questions. A system can be working perfectly and be completely wrong at the same time. The only thing that catches that is a human being who never stopped asking. Knight Capital was acquired by Getco in 2013 for a fraction of what it had been worth. The name disappeared. What it left behind is not a lesson about trading software. It is a lesson about what happens when intelligent, well-intentioned people stop asking the question no machine can answer for them. In an AI-driven financial world, the most valuable skill is not knowing how to use the tools. It is knowing exactly where the tools stop, and you must begin. Write down 3 things your financial systems do not know about your life right now, not the data you entered in the app. The real things, the ones that would actually change a decision if the machine knew them. That list is yours. No algorithm will ever write it for you. The machines are trading, but they are trading inside an economy that real people still have to live in. Next Monday on The Pulse, we are tracking something specific: the number of financial sector jobs being eliminated by AI automation right now, and which roles are next on the list. If you work in finance, accounting, or wealth management, that story was written for you. Subscribe now. We publish Monday morning.